Hey everybody, today I'm going to talk about how to trade breakouts safely. We've all probably heard the phrase that the majority of breakouts fail, and that's true, but that knowledge is actually what we can use to our advantage to help us catch the breakouts when they do occur. And for whatever reason, I've just been trading a lot of breakouts lately. It's just what my eye has been drawn to, and I want to show you how I've been executing on breakouts to avoid getting trapped most of the time. Of course, nothing is 100%. So let's just start with an overview, and then I'm going to show you actual trades that I took so that you can get a sense of what this looks like on like real charts, because of course nothing is ever picture perfect. But generally what we're looking at is we're looking for the market to be in a range. And as you know, when markets are ranging, the boundaries of the range are rarely clean, right? So you often get something like this. And a lot of times what people do when they're drawing the boundaries of these ranges is they go for like the very high of the range, right? So they would draw a boundary there and they draw a boundary maybe down here, right? And so they're waiting for those boundaries to break to trade a breakout. And it's a really easy way to kind of get yourself messed up. So one thing that I started noticing a long time ago is that really the boundaries of a range are not the extremes. The actual support and resistance is slightly inside of the extreme, and what we're going to be looking for is the area where we see the majority of rejections, and the market tends to try to probe beyond it but then fail. So oftentimes our actual support and resistance levels are going to be something more like this. And, you know, maybe like this. This isn't a great example because a lot of times you'd have more variability in the range, right? So it would look something like that. And so what we don't want to do is we don't want to catch breakouts, you know, as it's breaking above here and then get trapped. And we don't want to wait for the market to break way up here because often it's too late at that point. Like the move's already going and it's going to come back and probably retest inside of here, and you're going to end up getting stopped out only for it to continue up again. So what I want to show you is what I've been looking for on the charts, just using multiple time frames. Usually just 2 is all we generally need for this setup, and then how I catch my entries. So overall what I'm looking for is I want to see a range like this, usually on a time frame above whatever my entry time frame generally is. So if I'm trading on a 1 minute, I want to find a range on a 5 minute, maybe a 15 minute, sometimes even higher than that. But sometimes it is a 1 minute range or a 2 or a 3 minute range. And some of the examples I'm going to show you are going to be kind of like that. And sometimes we have smaller ranges sort of nested inside of larger ranges, and I'll show you what I mean by that as well. So what we're looking for is once we identify a range like this, what we want to see is where price has rejected over and over again, that at some point price comes up, tries to reject, and starts holding up here. And this is where we actually want to catch our entry. Of course, the opposite would be true on the short side. We would be waiting for price to eventually get below, try and reject, but start holding in here. And again, that's where we take our trade. So it's really quite simple. And then once I start to see this, what I do is I drill down to a lower time frame to get my entry. Now, there's a little bit more detail that is needed here to help us catch these right. So when we're looking at these failures, a lot of times it's not just wicks, but it's also bodies that will close above, but then the very next body rejects back down. So I'm going to use this ghost feed feature. I don't generally use this, but I think it might be suitable for what we're trying to do here. Okay, so we have this kind of fake candlestick feed. This is sort of ridiculous looking, but it is what it is, right? So again, I'm not just looking for like, okay, where are there no closes above? I'm looking for where even the market may have closed above, but then immediately rejected back down, right? So my actual boundaries of the range could still be in here because we've closed above, but then the next candle's back below, or we've closed above, the next candle's back below. And so what I want to look for is on whatever time frame I'm identifying my range, I want to wait for something to close above, and then I want to wait to see that when it tries to come back down, again, that it starts to hold. But it begins with on that higher time frame, the time frame that I most clearly see the range, it begins with a close above and seeing if this time that close above holds. So I think it's going to be best to just go to the actual charts and show you trades that I took so that you can see what this kind of looks like in real time. And I'm going to split my monitor here so that you can see kind of both time frames that we're working with. All right, so here we are. This was last week. This is the 17th of January, 2025. So I have marked here, this is my boundary and it's an M5 range. So let me actually get this on an M5 chart and get back to that spot. Okay, so my M5 is on the left here. Okay, so what we notice here is we have this area, right, across all these wicks, where on this one we didn't have a lot of closes above, but we have a lot of these wicks probing above and failing, probing above and failing, probing above and failing. And so the first thing that gets my attention is when this 5-minute candle closes up here, where previously we have not closed. Now that's not enough for me. I don't just enter there because a lot of times what you'll see is, again, you'll get a close above and the next candle closes right back below. And to me, that's effectively the same as a wick. So what I want to see is, I want to see price come back down and try to come back inside the range, but then hold. And so when I drill down to my 1 minute, which is right here on the right hand side, this is where I take my entry, where you can see this was the 5-minute candle closed right here. And then price came back down, tested that breakout level, I call it, and then we get this nice bullish variation pattern where we can take our entry for a pretty tight stop. It's a 4-point stop here on ES, and we can target our next key level, or a lot of times on these breakouts, I'll just target a 1 to 2 risk to reward. And that's usually pretty easy to hit on these kind of breakout trades. But you can see oftentimes once we get in the trade, they move pretty quickly in our direction. So this is example 1. We have price holding above actually a 4-hour key level as well, which was additional confluence. We have this 5-minute range forming, and then all of a sudden we get this close above the range. Now, there was actually an earlier entry you could have taken as well, because you also could have drawn this range like this down here, where again, test, 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 test. We got this one candle close above, but the next candle close below. And then here we close above, and that's where we go, okay, we closed above again. Now let's see what happens after this close. So that was right here where we closed above on the 1 minute chart. And then we pulled back into that breakout level, and this would have been a suitable entry as well. This was a large candle, but I had my breakout level on this one up here. For whatever reason, it's just where I had it, was up here. And so I caught this entry here. So let's move over to the next trade and see what this next one looks like. Okay, so this is another pretty clean setup. Basically, same idea. We have this large 5-minute range where we get this horizontal area. It's also aligned with a 4-hour key level as well, but a horizontal area where we can see price has tested multiple times, and has not been able to hold above the area. And then here we get our 5-minute close above, and then we pull back in and get that retest and bounce. Now, what I also want to point out here is that right here was also the close of the 11 a.m. candle. So this was the flip from 11 to 12 a.m. And this smaller range here was nested inside of a larger range. So I want to show you what the H1 chart looks like as well. So this was the H1 of that same area, and you can see we have this area where we got above, but the next candle rejected below. We got above, next candle rejected below. Tested, tested, and then again, here's that hourly close above. And for the first time, when it tries to reject, it actually holds. And so over here on the 1 minute, this one I just took as a 2 to 1 risk to reward, or reward to risk. And you can see the entry was just a very strong bullish engulfing candle, very simple entry, but this was all predicated on we had a 1 hour close above a range that previously the market has struggled to hold above, and additionally a 5-minute close above that same range. Here's the 5-minute range again, nested inside of that hourly range, right below the break of the hourly range. So we got both a 5-minute close as well as the 1 hour close, and then the retest, and then the pump up. So a really, really clean trade to catch that break and retest. Let's move on to the next. Okay, so on this day, we actually had multiple trade opportunities. So this was a situation where the overall trend was up on the larger time frames. We had a nice 15-minute trend going up. We got above a big weekly key level, and then the 15-minute was pulling back. This is a 3-minute chart, but the 15-minute was pulling back here into that weekly key level. And then here on the 3-minute, I noticed this range across this area. So again, we have a wick probe above but fail. We have a close above, but the next candle rejects right back down. Another wick attempt and then fail. And then finally here on the 3-minute, we get this close above the range, right? So what this looked like then on the 1-minute, which is where I was entering, was right here on the right, where you can see once we got that 3-minute close above, right, which is basically right here, this is the 3-minute close above, we tested into this level, long lower wick, bullish engulfing candle for the entry, and again, I just took this for about a 2-to-1. Now, this one, to be fair, I actually trailed my stop at this red line here, and I got stopped out. The market had a huge order come in, swept down, tripped my stop, still held the breakout, and then ultimately went up to target. So I got about a 1R on this trade, but you know, that's just going to happen sometimes. There's just a massive order that came in, and there's nothing we can really do about that. Now, later on this same day, this was a little trickier one to spot, but I still consider this a breakout. So we have here again on the 3-minute chart, we have this area where first it was holding as support. So we have these wicks down, testing, 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 testing. Notice I'm catching most of these wicks here. There's probes below it that are failing. And finally, the market closes below. I'm not looking to short here because we're in a bullish trend. Market closes below, tests from the underside with this wick, gets one close above, but then immediately rejects, right? The next candle immediately rejects hard, but this big candle halted. It got nowhere. There was no follow through on that, right? Then we close above this key level again. The next candle forms this doji holding above the key level, and then we start to push up. So on the 1-minute, this is what that looks like, where we close above the key level, have the doji, and then after that doji, we started to push up. You could have entered on this earlier candle. I waited for this candle here, and then again, I just went for a 2-to-1 reward to risk on this trade. So it's the same idea. You have this area where the market is struggling to close below, gets below, and then is struggling to close above. And then when it does close above and hold, that's the key idea. It starts to hold above, then we look for our entry. Okay, there's one more trade I want to show you, and this one's from today. Okay, this was today's price action, and this one's pretty clean. So the range itself was actually kind of more clearly seen on this 2-minute chart. You can see at the open, we were up here at, was also a key level. I'm going to show you back further. You can see we had this wick here on news that rejected. We rejected here just after the open, got a few wicks above, closed above here, but then rejected back down, closed above, rejected back down, right? So we've been struggling to hold above this area, which is sort of key. I think also on the 3-minute, you could see this pretty clearly, where we just couldn't really hold above here for more than a candle. If we look back at this level as well, you can see that it was holding all throughout this area in the overnight as well, and we did pump above it, and then again, fail back down and then hold below this level. So we have a very clean, what we call breakout level, right? And then same idea, we get this nice clean close up above, and this time, as it tries to pull back down, it fails to be able to get inside of this range again. And that's when we start to look for our trade here on the 1-minute. We had 1 wick, 2 wick, 3 wicks. When it broke above these candles here, that's when I entered my trade. Again, I just went for a 2-to-1 reward to risk. I actually killed this a little bit early. When this pumped up on this candle with all this volume, that looked to me like it might be sort of the point where the market was going to pause, and it was really close to my target. So when this next candle pulled up again, close to that area, that's when I actually just decided to kill the trade. You can see this candle, it touched my profit target. I didn't get a fill here, and then it started to pull back, and I just exited because of there was all this volume here coming in, and you can see the market did pull back a little bit, and I just didn't want to risk giving back those profits. But this you can see really clearly how we got above, and now, unlike here where we kept rejecting back down, This time we're holding above, and that's a change of behavior from what the market has done in the past. Look at this 3-minute chart. It's even more clear over here, right? Where all of a sudden we're closing above and we're holding, and that's a change. It's different from what has happened in the past, and that's our signal that this thing might be ready to move up. So I've been loving these breakout trades. You can see like there was zero drawdown on this trade. It just moved immediately in our favor into profit. It was very, very easy trade to hold, but this is how I like to trade breakouts. I try to identify what I call the breakout area, which is usually not the extremes of the range. It's the sort of main area underneath the extreme where most of the rejections are occurring. And it's an area where the market has struggled to hold above prior. And then what we look for is when it does start to hold above, do we get a clean entry? Like even here, if we wanted a trade, the market got above, it was holding, but we never got like that nice bullish candle to actually give us an entry anyway. So there wouldn't have been a trade here. The market actually failed back below. And you actually could have shorted this if you wanted to because it was a failed breakout. But I was looking for longs this morning. We were holding above this major trend line, and this was the trade for me. It was a nice trade. I kind of wanted to hold it up to here, to be honest, to this key level for a bigger reward. But Trump was going to be speaking at Davos coming up. The volume in the previous part of the day had been very, very low and very choppy volatility. So I decided to just get a clean 2R. And then, like I said, I did close this one just a touch early because of the volume that came in on that spike. But I hope you guys found this helpful. I've got a lot of these trade examples. If you go and you join my Discord group through WAP, there's a whole area in WAP of trade breakdowns where I go through these setups with, you know, every time frame, starting from the daily, the 4-hour, going all the way down so you can see the context of the market. Not only these breakout setups, but other setups as well. But this has been one of my favorite trades to take lately. They're very comfortable trades. They feel very safe, and there's a lot of confirmation with them. So it's a pretty easy trade for me to take. I hope you guys found this video helpful, and I'll see you in the next one.